Let's get started by introducing then our experts who will be guiding us through the next half hour. On the fundamental side, Hemang Jani, Senior Vice President Sharekhan joins in on the show. And to chat technicals, Ashish Chaturmata, Head Technicals and Derivative Desk Research, Fortune Equity Brokers is with us. Thanks very much, gentlemen, for joining in. We'll start off then our show with our first query for the day. This one comes in from a student from Hyderabad. Sandeep Singh has sent in this query on Hindustan Copper.
I bought Hindustan Copper 500 shares at the rate 145. Should I hold or average?
Alright, so Hindustan Copper, but if you look at the stock that's tumbled about, it's trading at levels of about 60 to about 65. Let's get a fundamental check first. Hemang, what would be the advice coming here? Because in last 1 year, the stock's fallen some over 40%. Even for 2014, it's down about 10%. Would you advise him to average at these levels?
Well, clearly averaging would not be a great idea, but when I look at the stock, there are two issues that this company is facing. One is that it has a PSU tag attached to it, so because of the subsequent dilutions that we have seen, overall de-rating has happened in the stock. And the other thing is that because the mining has come to a kind of a standstill and the performance has not been good, so even when the stock has actually gone down, in terms of valuations, it's not looking that appealing. It's currently quoting at about 17 times forward PE. But there's a feel that now the PSU stocks could come back in action once there's a change in the government and the policies. So I think it makes sense to hold on to this one with a target price of about 150 odd.
Okay, that's a call coming in on a Hindustan Copper. It would be advisable that you hold on to the stock. Maybe we could see an up move in some of these PSU stocks, so perhaps the upside looks intact. Time to get in a technical view then. And Ashish, what is it that you would be advising Sandeep to do with a Hindustan Copper?
See, as far as this stock is concerned, it has tested its all-time low around 40 levels and has been consolidating for last 6 to 8 months between this 45 to almost 75 levels. I think now because we are already seeing a very strong momentum in most of the metal names, so I think there can be some sentimentally strong upside in most of the metal names, and that's I feel Hindustan Copper can also be part of the rally. So at current levels, I recommend to average the stock at current levels with a stop below 55 levels. On upside, I think 85-90 could be the possible target in short term where he can exit half of his quantity.
Okay, so that's the advice coming in on the charts, Sandeep. You can look into average at current levels, and on the charts, the near-term target on the stock would be about 85 to 90 rupees. Let's chat about a second query for the day, and that too also comes from Sandeep Singh. He has a query on TCS.
Can I buy TCS at these levels? My time horizon is 1 year.
Okay, let's help Sandeep out with what to do with the IT space, a very interesting space. Remember, it was clobbered in Friday's session on account of what happened with the currency. You do have a lot of people who will perhaps be fairly curious as to how to approach the large cap IT basket. So, Hemang, let's get in your view. There's been quite a bit of news on the fundamental side for TCS as well. But given that it's not done a whole lot in the last 1 month, given the selling pressure we saw in Friday's session, is this the right opportunity to nibble in, or you'd wait for further corrections?
Well, overall, we continue to be positive on the IT space, and TCS clearly would be the standout performer. We think that if one has a 1 or 2 year kind of view, definitely one should accumulate the stock. The only thing is that in the immediate short term, because there is a tactical shift happening from some of the IT and pharma names to the cyclical names, so there might be some kind of a pain probably for next 1 or 2 months. But that could provide a good opportunity to enter into a stock like TCS. So one can definitely look at buying in 2 or 3 parts. We continue to be positive on the overall spending on tech in the global markets. And though the rupee has appreciated in the last few days, I think there is going to be some kind of a weakness as we see more numbers and clarity emerging. So one can definitely accumulate this one with a target price of about 2,600.
Right, so that's the advice coming in from the fundamental side on TCS. Sandeep, you can look to accumulate TCS at current levels, or further dips also you can look into purchase that. The fundamental target on TCS is about 2,600. Let's get a technical check on the same. Ashish, we've seen some, serious correction in the IT stocks this week. Even if you look at TCS, it's almost given up its 2014 gains. On the charts, what would be a reading?
See, I think now these stocks will go into consolidation because already the focus is more on high beta names, and already we are seeing a strength in the rupee, so which will lead to some amount of selling pressure. But definitely these stocks are the long-term bets. So I think on dips this can be accumulated. 2050 to 2000 is a very strong support for the counter. So if it comes around those levels, one can average the long positions in TCS. We are looking for a target of 2450 in short term.
Let's take it straight then to the Portfolio Advisor segment. And well, Ashish Badaya, it's your lucky day. We're discussing your portfolio. Well, let's just run you through his profile. He's 30 years of age. He's in the services sector. He's got 12 stocks all in all with a time horizon of the next 1 to 2 years. Here's what the portfolio consists of. There's Ashok Leyland in his portfolio to start off with. He's got close to 300 shares at a buy point of 19. He's got 100 shares of Kohinoor Foods at 45 rupees. There's Praj Industries. His buy price is 47. To IT then, and he's got quite a bit of it. Hexaware, he's got it at a buy price of 137, close to 50 shares. 30 shares of KPIT Tech at 180 rupees. There's 50 shares of Geometric at 107. Thomas Cook, he's purchased that as well at a level of 88 rupees, close to 50 shares. JM Financial, 500 shares at 32 rupees. There's LIC Housing Finance as well, just about 10 shares in his portfolio. 210 is where he picked that up at. Moving on, there's also GIC Housing Finance. He's got that close to 50 shares at 106. Mahindra Eugene, he fetched close to 100 shares. His buy point is 140. And of course, there's RV Denims. That one is picked up at a level of 51 rupees. Hemang, you've had a look at the portfolio. There's quite a concentration to mid-cap names as well as IT. What's your sense about the buy price as well as the diversification?
Well, clearly, as you rightly pointed out, there is too much of a concentration towards the mid-caps and small, price names. So he could definitely look at adding some of the large-cap blue-chip names in the portfolio, which would add to the stability factor. Otherwise, by and large, the stock selection is pretty good, and particularly the price at which he has entered are reasonably okay.
So clearly, there are no blue chip stocks featuring in the portfolio. Let's discuss individual stocks then. Well, let's see what kind of churning would be required in your portfolio, Ashish. The first three stocks are Ashok Leyland, Kohinoor Foods, as well as Praj Industries, and no major gain or losses have been seen for the first three stocks. Hemang, what would be your advice for these three stocks?
Well, as far as Ashok Leyland is concerned, the company is going through a lot of stress. If you look at the monthly numbers, it's not been great. So we would suggest a sell into Ashok Leyland, and he could move into something like TVS Motors, where the overall performance has been far better, and we are looking at a target price of about 97 for that one. As far as Kohinoor Food is concerned, overall that company is doing well, but the only issue is that because of the drought conditions and the higher support prices, the input cost has gone up, but overall we think that that segment provides a good potential, so he can hold on to that one with a target price of 55. And as far as Praj Industries is concerned, we've seen some uptick in the sugar and ethanol segments, and we think that next probably 1 or 2 years there could be some kind of a pickup in that particular space, so he can hold on to that one with a target price of 54.
Okay, that's a word of advice coming in on the first three stocks. Let's focus in on IT then. Hexaware is what he's got in his portfolio. There's also KPIT Tech at 180 and Geometric. What's the word of advice given some of the concerns, Hemang, that you flagged off here?
Yeah, clearly one of the things which is going for mid-cap IT is that there is a lot of buzz that there might be some kind of an M&A activity over the next few months, and we've seen that because of that some of these stocks have actually done well. Particularly coming to Hexaware, operationally doing very well. The recent acquisition by Barings has actually added to the positive sentiment towards that. Valuation-wise, it's looking pretty attractive. So he can hold on to that one with a target price of 180. KPIT Cummins, again, doing pretty well. There is some kind of an upgrade in the guidance that we have seen. So that also he can hold on to with a target price of 176. And Geometric Software, again, the company was not doing well, but off late the management commentary and particularly the business segment where they're focusing on, there are some positive triggers, so he can hold on to that one with a target price of 127.
Okay, so hold on to your IT stocks. They may give you some more returns in the coming days. Stock like Hexaware and KPIT Cummins, as Hemang pointed out, the target prices. Let's see the other three stocks then in the portfolio. He's got Thomas Cook at 88 rupees. He's also got JM Financial as well as LIC Housing Finance. Hemang, what would be the advice on these stocks?
Thomas Cook, overall the company has done well, and we've seen some kind of a pick up in that particular sector, and we think that since the consumer spending towards that would increase, and the recent acquisition that they have done of Sterling Holiday could provide additional upside, so we can hold on to that one with the target price of 91. As far as JM Financial is concerned, that company has been going through a lot of operational pressure because of the kind of thing that we have seen on the financial services space. But the company is sitting on a cash of 1700 crore, and if the market picks up, then obviously the broking and the related businesses would provide upside. So you can hold on to that one with a target price of 34. Also, banking license where they have applied with Mr. Vikram Pandit in a separate company could be an additional trigger for JM Financial. And LIC Housing again could be a good interesting bet, wherein the banking license could be a trigger. Overall, company is doing extremely well in terms of valuations. It's almost quoting at a discount to the adjusted book value. So that also you can hold with a target price of 250 rupees.
Okay, that's the word of advice coming in on that set of stocks, some churns that you need to make. And let's move on then to Ashish's last three stocks. There's GIC Housing, a Mahindra Eugene, and RV Denim. What's the call here?
Well, GIC Housing is a great dividend yield stock. It's a steady performer, and one can hold on to that one with the price target of 130. Mahindra Eugene, there's some kind of a corporate action which has happened, and we think that now that upside potential has already reached, so he could look at entering into something like a Bharat Forge, where things are looking much better, and there we have set a target of about 450 rupees. And the last one, RV Denim, we think that, operationally in terms of fundamentals, that company does not look that encouraging. We think that in the current scenario, a company like Raymond would be a much better bet for him to enter into because of the kind of restructuring that the Raymond has done, much stronger balance sheet and much stronger brands. So we think that this makes more sense, and he can buy that with a target price of 387 rupees.
All right, that's the advice coming in on the last three stocks. But Ashish, let's once again take a look at the portfolio and see what Hemang has suggested. The first stock in your portfolio was Ashok Leyland. The advice coming in there is to exit. And in fact, you can look into, enter something like TVS Motors, and with a target price of about 98 rupees. Kohinoor Food, hold on to that stock. The advice coming in, you could look in for a target price of about 55 rupees. Then next was Praj Industries. You can look to buy more, in fact, of Praj for a target price of about 54 rupees. Well, the next ones are the IT stocks in which Ashish are actually making money. The advice coming in is to hold on, in fact, but for Hexaware, you can look into buy more of Hexaware with a target price of about 180 rupees on that. KPIT Technologies, hold on to that stock as well. The Hemang has suggested a target of about 176 rupees for that. You've also got Geometric in your portfolio. You can look into buy more if you want with a target price of 127 rupees. Next up is Thomas Cook. Hold on to that particular investment and look out for a target price of about 91 rupees on Thomas Cook. You've also got JM Financial, which has been in news for its banking license. Hold on to that particular stock as well and look out for a target price of about 34 rupees on that. LIC Housing Finance, you can buy more at current levels for a target price of 250 rupees, and GIC Housing is the other stock which you can look into buy for a target price of about 130 rupees. Mahindra Eugene, sell that one and enter into Bharat Forge. You can look out for a target price of 450 rupees. And from the textile space, the last stock in the portfolio was RV Denim. Exit that as well and look into something, enter into something like Raymond, and on that you can look out for a target price of about 387 rupees. All right, let's get you some trading as well as investment ideas for next week. Let's start off with the trading ideas first. Ashish, first up, a word on index. Nifty, broke out of that range of 62 to 6400 this week. It also, in fact, touched the 6500 mark. We are trading at record highs. From these levels, what kind of resistance level would you be watching out on the index in the coming days?
Already we are trading at its all-time high, so there's no, as far as immediate resistance is concerned. But if you look at the retracement levels, then around 6620, there comes a stiff, a level where I think a market may see some amount of profit booking emerging. So I think around 6600, 6620, we may see some amount of profit booking coming into the markets. But as far as downside is concerned, now I think till we hold above 6450, any dip would be an opportunity to go long. So I think ideally the range should be between 6450 to 6620 on upside, and during this range bound market, I think a lot of stock specific action can be seen.
Okay, that's the call on the index itself. Given that you're saying we will see stock-specific action, Ashish, where is it that you're betting on in terms of individual stocks?
See, we are betting on high beta names like, first of all, L&T. This stock has given a major breakout on its weekly and monthly charts after a consolidation of almost 9 to 12 months. So we are looking for a target of almost 1250, 1260 on upside. One can initiate a long position at current levels, keeping a stop below 1185. The second bet would be on Tata Steel. The stock has formed a major double bottom formation, and this is one stock where we are seeing a strong short covering today. Almost 8 to 9% open interest has seen a reduction. So I think this is one stock where we are looking for a target of 398 to 400 on upside. One can initiate a long position, keeping a stop below 365 levels.
All right, those are two long calls on two blue chip stocks like L&T as well as Tata Steel. Let's also get a fundamental check. Then Hemang, a lot of people have called this a hope rally or a pre-election rally. Are you convinced with the Nifty movement, what we got to see in this week?
Absolutely. I think we have seen good, strong inflows over the past few weeks. Even on the currency front, we had some positive news, and we think that because of some kind of a stability and outperformance of the currency, you could expect more flows to come through. And because of the fact that election could be a game changer for our markets, there is going to be some amount of buying ahead of that. But we think that overall the market could sustain this rally, let's say, to around 68 to 7,000 levels.
Okay, wow. So the steam really seems to be intact according to Hemang, and we can watch out for levels of even 6,800 to 7,000 on the Nifty. In that vein then, Hemang, what is it that you're spotting in terms of investment themes for our viewers?
Well, clearly there are two themes which are emerging right now. One is banking and one is capital goods. These two sectors have been bombed out. We've seen that the numbers have not been great and people were not sure about when exactly the recovery would start. We think that the market movement and the kind of commentary that we've seen from the managements indicate that the revival has begun. So these are the two areas that we are focusing on, and from that perspective, we have shortlisted two ideas for investors.
Which are which stocks?
We have shortlisted two stocks. First one is Federal Bank, where we think that there is going to be some kind of a re-rating of the stock, and currently it's quoting at about 0.83 times price to book on a FY15 basis. We think that though the performance of Federal Bank has been quite steady over the last 2 or 3 quarters, there was some issues with respect to the asset quality concerns, and now with the new management coming over, we think that you could see some kind of improvement or uptick on the NPL side. Overall, the margins are likely to be about 3.3%, the net interest margins. And we think that given about 15 to 18% kind of earnings growth, this kind of a bank, which is available at about 0.83 times price to book, is attractive. And we've set a target of about 110 for this one.
What's your second pick, Hemang?
The second pick is Thermex, and again this is into capital goods and services areas, and we think that across the sectors the company has been doing well. There has been a decent amount of order inflow, except water business, where there has been an expectation that next year you could see some kind of a turnaround. We think that once there are elections are over and you could see some kind of a revival in the capex cycle, these companies tend to do very well, which is what we have seen, L&T even doing extremely well. So we think that one can buy into this stock, which is currently available at about 12 to 13 times price to earning after 2 to 3 years of pain. So we think that this one can buy with a target price of about 750 rupees.
Okay, Federal Bank and Thermax, those are the two stocks that Hemang is advising that you can go long on. On that note, gentlemen, it's been great having you with us on the show. Ashish as well as Hemang, thanks very much for being with us.